This is Tony Novak here to share a few points on how to stay out of tax trouble. Let's jump right in. Today's topic is a recap of the 1099K panic that's been in the news. If you recall, last year, the IRS delayed implementation until this year, 2023, a rule that said that electronic payment providers like PayPal, Venmo, Cash App had to let the IRS know when they sent you money. Anything more than $600, the IRS will know. First thing is that rule is in effect now, 2023, unless IRS or Congress changes it before the end of the year this year. I don't think that's likely to happen, but it could. So let's review the situation and take away a sense of panic. First of all, nothing in this rule or anything recently has changed the tax law. If you receive income through PayPal or through any other source, it's always been taxable. It remains taxable. If you receive money, payment for something, splitting dinner, selling a used car, whatever, that is not income. Nothing changes. Let's run through the scenario. It's the end of the year. It's January 2024, and you receive a 1099K form, one of these dreaded forms in the mail, and it has some number on it that you receive from PayPal or Venmo or some other service. There's three possible scenarios. One is that had nothing to do with income. You sold a used car, you sold a refrigerator, took in dinner for because you paid for a trip and you're splitting it among family members. In that case, it's easy. You just note the amount that they sent in and you put that same amount, not income, on what's called Schedule 1 of your tax return. It's not a big deal. Recognize it, note that it's not income. The second scenario is that you sold something. Let's say you collect art, or let's even say you bought tickets and you concert tickets, and you bought 20 of them and you sold them online to make a few bucks. Fine. The IRS says that if you sold a thing, that's different than earned income. And so again, you report the amount on the 1099K, put it on your tax return. Probably it's going to be on a Schedule D, which is a different form, and you put the amount that you paid for what you sold, so you're not taxed on the whole amount. But again, if you sold something at a profit, and that was the intent to sell it for a profit, then that is income and always has been income. The third scenario is if you're actually in business. Let's suppose a close relative of mine sells clothing, has a fashion line. It's not a lot of money, but it's a little bit of money, sells it online and gets that amount recorded. In that case, you're actually operating a little business, whether you realize it or not. So not only do you want to recognize the amount on the 1099K, also any amounts from other sources, but then also you want to deduct all of your expenses. What did you pay to acquire that? What was the transportation cost to get it in? What did you pay in shipping? What about advertising and internet, telephone, all those other types of things? In that case, that's called a Schedule C, and we're going to deduct it that way. So one of those three ways. So today we ran a little more than a minute to take away the panic on a Schedule 1099K. And I want to thank you for showing up. If you like what you saw and want to see more like it, I invite you to follow me or subscribe. Join me here for a minute tomorrow, and hopefully my voice will be a little better than it was today. I was struggling. Thanks.